Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. US equity markets ripped higher on Friday night to end a volatile week in positive territory after a weaker than expected jobs report saw the interest rate market price in a second 25 basis point Fed rate cut before year end. While expectations of additional Fed rate cuts would typically be supportive of equity markets, news over the weekend that Warren Buffett's Berkshire Hathaway has reduced its holdings in Apple and intends to continue reducing and increasing its cash levels will raise eyebrows given the size of Omaha's phenomenal investment track record. This week's key economic calendar is relatively light on, with the main highlights being speeches from several Fed officials and the Michigan Consumer Confidence Index. While in the background, Q1 2024 earnings season will continue to roll on. Let's take a look at the chart of the S&P 500 and the NASDAQ to see where they are as we start this new week. Right, there's no change to our view from last week in that we have completed a wave A, or the first wave of a correction from this 52.64 high, and that wave B, or the second wave, is playing out. Now, I'm looking for signs of topping in the coming sessions here, as you would know from last week's video, which will then see a move lower down towards this area here. Now, you have to keep in mind we have the 200-day moving average increasing. We have a wave equality target coming in around here. We'll firm that up once we know where the wave B high is. But if we were to see signs of basing in this area here, I think that would be positive in terms of looking for another leg higher in towards the middle or end of this year. For the NASDAQ, a similar situation is playing out. We see this decline here as the wave A, or the third wave, the first wave of this correction from this 18,464 high. Currently, the rally as it is playing out is viewed as a wave B. We should start to see some topping in this area here in the coming sessions, and that should be the precursor for another leg lower to complete wave C. Once again, if we were to see our wave C, signs of basing on the candles up against this 200-day moving average in line with the wave equality target, which we will firm up as the wave B is formed, then we look for that as a positive sign for another leg higher into the middle of this year. Now, keeping in mind, if this rally were to extend, I suspect much higher than this area here, then, and certainly above this 18,464 high, you would say that this low here actually completed the correction, and this whole sequence, which I'm looking for, obviously won't be playing out. But keep in mind, at this point of time, this is still our base case. We're looking for topping here and another leg lower. Thank you for listening and have a good week ahead.